Folks, this is the most important interview of the week. Don't listen to me. Mark Zandi, Fix Housing. Martin Feldstein, Fix Housing. Sometimes research just jumps out. Oliver Chang, Morgan Stanley. You're based in San Francisco, right?
I am.
How is prices in San Francisco? Are they stabilizing at all?
You know, the market is really working in different tiers, right? You have the high-end market, which has a little bit of mortgage liquidity, so it's doing okay, and then you have the low-end market, which is facing a lot of foreclosure issues.
Foreclosures. Here's the chart. Now we're going to have many charts here. This is going to be great 2 blocks. Foreclosures is a percent of loans. Chang on Posner Zingales. You've got a plan. Eric Posner and Luigi Zingales, Booth School. They say, I simplify. Everybody gets a haircut. Everybody wakes up the next day solid, and the banks get an equity kicker on the back end when you sell the house. Your plan, rebuild part 2. What do you mean by rebuild when you say let's fix housing?
Sure. So what we're talking about is addressing this backlog of the foreclosure inventory, right? We've created a significant oversupply of distressed housing, and that's keeping home prices down and preventing a real market recovery. So in our opinion, this is the critical problem that needs to be addressed. In our rebuild proposal, what we're outlining is basically an enhanced bulk sales program in which the agencies and the banks are able to move this distressed inventory into the hands of investors that are willing to rehabilitate them, put tenants into them, make them income generating and productive assets, which ultimately benefits neighborhoods.
Alan Meltzer, early days of this crisis, suggested much the same thing with tax treatment, and he said, I don't care if the wealthy make a lot of money here, we've got to clear the housing market. Is that the political pushback to your plan, the Morgan Stanley plan? Is this just, it's another thing for Carlyle or Evercore or whoever buys this stuff in bulk?
Sure. You know, honestly, I don't think that the pushback is really that great, and in a sense, I think that concern that you're discussing can be overcome by the way that the program is structured, right? So there's a concern that if you simply move all of the sales in bulk to investors without any controls and without any upside participation for taxpayers, that ultimately that type of result could occur. To be clear, that's not what we're proposing here.
Right.
We are suggesting that the taxpayers can actually participate on the upside by designing the program in such a way that when investors...
I could get an equity kicker? Cool. Let's look at the research note, folks. We protect the copyright of all of our research sources and the op-eds. Don't ask me for Oliver Chang's genius. There is a concern that the solution will not be market-based and we'll see the GSEs and FHA become landlords operating a business they have no experience running. Wait a minute, isn't that where we are now?
So this concern is really the other end of the spectrum of what I was just discussing, right? So this is a concern where essentially the government remains involved, not only involved, but actually running these businesses as landlords. And in our opinion, what's critical to this solution is the ability and the expertise to manage rental properties, right? There's a lot of operating experience that needs to be applied here, and we think that there's nobody in a better position to do that than private investors. And so by having this type of partnership where you sell the properties to investors but retain some upside, the agencies are then in a position to have somebody else run the business efficiently, but still participate in the upside.
What's the price dynamic here? This is fascinating, almost microeconomics. Bring up this chart. We haven't shown it in a while, but we've had it for, unfortunately, too long. An unprecedented house price pause. Okay, it's a log chart. Slope matters, and it's a constant quality house price index. We have more rentals. We clear the market. Does house prices stay stable?
I think the first thing that we need to do is to stabilize home prices, right? And in our research, Morgan Stanley, what we've seen is that there's almost 2 different markets in housing right now. There is the distressed housing market where prices have somewhat stabilized because of investor interest, but that's happening at a very, very low level. And then there's the non-distressed market, which is the traditional individual-to-individual market where prices are still continuing to decline. So we need to get that to stabilize first before we can have any sense of real recovery where those prices can start going up.
How much further can house prices go down?
I think it depends what's done, and that's why addressing this backlog of distressed inventory is really important. Now, we've talked so far about the concerns of the market of not having an investor free-for-all, not having a government managed process. So it would be great to talk a little bit about what we think can happen, which is something in the middle.
What can happen?
Which is a process where investors get involved and they actually rehabilitate these homes, right? So you take an empty home right now, which nobody's living in, which is dilapidated, not paying property tax, and you turn it into a productive asset, right?
What would be an example of an institutional investor that would buy your rebuild a bunch of homes, thousands?
So we've talked to several investors about this, your typical hedge funds, real estate funds, private equity funds.
Fine, good enough. Yeah, no, keep going.
that would provide the capital and then would work with operating partners to actually go and manage these properties, right? Because this isn't like buying a bond, where everything is pulled together and you can manage it from a central location. Housing is inherently a local phenomenon, right? So the housing market in Phoenix is very different from the housing market in Chicago. And if you buy all of these rental properties, you need to have the operating efficiency to run them in these local areas.
Chart. This is a good one. I love this chart. It's a little mathy, folks. There's the regression, the trend line. Housing investment to GDP from the early 50s. There's the boom. It's amazing, Oliver, how boomy the boom was. You look at the Integran. The Integran, folks, is that blue area under that big boomlet in the 90s, just the pi r squared blue area. And that's a remarkable boom that we had, isn't it? We forget.
It absolutely is, and we discussed this in one of our research reports that when you look at housing from an investment perspective, there is a fundamental change that's happening in the housing market right now, which is that we are moving away from the high levels of home ownership that we had during the housing bubble to now, definitely lower levels today and increasingly lower levels where we see this going. So that means that we're having homeowners shift to become renters, right? And so the investment into the housing market in terms of home building, in terms of adding inventory to the existing supply is really today not necessary because of this shift that's happening right now. At some point, it will become necessary again, as you can see in the chart. We're significantly below trend, but we need to figure out what to do with the present problem, which is this oversupply of distressed inventory, before we can start thinking about how do we get that investment to come back in.
Okay, Oliver Chang, thank you so much for coming in.